My name is Vincent Luz with Forex Trading Institute. Please take a couple minutes and go over the following risk disclosure. Lesson 15, Pivot Points. Pivot points are invisible levels of support and resistance based on the previous day's trading range and price action. Pivot points are calculated based on the open, the close, the high, and the low for the previous day. So it means every day there's going to be a new calculation because there's going to be a new open, a new close, a new high, and a new low for the day. Pivot points are used to identify potential turning points, and they help us get entry and exit points. They're also used to determine the maximum range and the most probable range that currency is going to have. And pivot points should be used in conjunction with other factors to get the maximum productivity of these pivot points. The highest probability trades present themselves during the most volatile hours. Now, the pivot points take into consideration the high, the low, and the close of the previous day. And the pivot point formula takes the high plus the low plus the close, and it divides it by 3. And that's considered the pivot point. The resistance, and you're going to see it at the abbreviations here, H is for high, L is for low, and C is for the close of the previous day. And you're going to see that it also gives us 3 resistance points and 3 support points. And their formulas are 2 times the pivot minus the low, 2 times the pivot minus the high, and so forth. You don't have to memorize these formulas. You're going to see most charting packages automatically calculate the pivot points for you. Now, the rules to trading the pivot points: anything that's below the central pivot point is considered to be in the buy zone. Anything above the central pivot point is considered to be in the sell zone. We only want to buy, above the central pivot or sell below the central pivot point when it's pushed convincingly by a charting pattern or by a convergence using other tools like a Fibonacci number or a bullish engulfing pattern or some other technical factor. You're going to see pivot points are a handy reference for trading a currency pair. That's why we want to sell the buy and sell zones appropriately, to have the highest probability that the market will move in the direction from when you enter the point. And the key thing about pivot points that if you know how to use them, you're going to get in at the exact point when the market's going to reverse and go your way right from the beginning. So you don't have to make big protective stop losses. You're going to have small stop losses, taking smaller risk. They're considered invisible levels of support and resistance, and usually we're going to place stop loss on the opposite side of the pivot point behind your position. And make the trade. It's going to help us make the trade. Look to make the trade in the buy or sell zone. Look for a convergence of pivot points, Fibonacci, support and resistance, and indicators, and define a level of support and resistance to enter that trade. Now we're going to go to the live market. I'm going to show you how to use these pivot points. The first thing, we open up a chart, and you can find these in all different time frames. Let's open up the pound, like trading that currency, and let's open a 60-minute chart. Now let's go back. Let's go back to that charting package. And now we have to add, let's just scroll back a little, and now let's add the pivot points to our package here. So let's go to the indicators, and let's go to here to where it says, and you want to use, I like using the pivot daily time, and you're going to have to edit it the first time. I like using the time frame from 22:00 to 21:59, from the open time to the close time. So you just want to save it as default, and then you're only going to have to save it the first time. And look how the charting package, and let me go back a second just to edit this, and you might want to also put the thickness where it says style, the thickness, I like putting it at 3, just so you could see the pivot point. Look how it puts in a nice big line. Now, what happens here, you want to use these pivot points. So, for example, if I'm looking here and we have an A, and let's chart this right here, and you see how we're going to use this in conjunction with all the other tools that you've learned already. And you see here, and let's change it to black. Okay. Black font. I was putting black font and then putting it thicker here. Okay, let's see if it changed. Okay, there we go. And we have a B here. Okay, and we're trying to find, and I like putting in the range here, from A to B. Okay, this is my trading range, and I pull my Fibonacci from A. Well, let's see here first. Before I show you that, I want to show you these points. Look, the pivot point is the black point here, and I have it set as black. And then you see how it gives me resistance 1, gives me resistance 2, and all the way up I would find resistance 3. Now, as I go to the bottom, I'm going to find this is the pivot, okay, point, and then I have support 1, I got support 2, and I got support 3. And you see how every day the pivot point changes. Now, when I'm looking at this and I say, okay, I'm looking for an entry point, okay, and I have that AB and I'm looking for that C, look how I pull from A to B. Okay, it gives me a Fibonacci number. So this is a support level that is converging, okay, with a Fibonacci number. Okay, so this is a very high probability C. Now, on top of that, we have, and you're going to learn this in the strategy course, we have a double zero here. That's called the monster zero. I call it the monster zero because here is a very, people like putting their buy orders near 0, and their stop losses near the 0. So it makes a lot of orders get bunched up at these 0 points. Okay, so this makes it a great entry point. So if I put my buy order here, look how the market went down. Just hit that pivot point. You're going to be amazed how it just hits that pivot point, and then the first level of resistance is a point, and then we have the second level as resistance. Look how it's converging with this level. So if I would have taken that trade, I would have I like putting my limit just below that area, and look how the market just took off, and look how it hit right below that resistance. And you're going to see most of the time it stays within 2 resistance levels or 2 support levels. Very rarely does it go the market to the resistance 3. And look how it hit exactly that resistance point. Now, let's look at another example. If we place this back, okay, and here's another great, let's erase all these tools. Okay, let me erase these lines. Okay, now look at how here we had an A, and then we had our B, okay, and the market pulled back to C, and then we were looking, okay, where is this? This is our new range. And remember I said that any of the rules, ideally you're going to buy at the pivot or at support 1 or at support 2, wherever they converge. So now if I pull my Fibonacci now again from A to B, look how there's a convergence at the 618. There was no convergence at the pivot point. In addition to that, we have that monster zero, 4500, monster zeros that were at a double zero number, okay, right at this area. So it means I want to buy right at this 618, converging with support 1. You see how the little blue line, support 1, okay, and look how the market pulled back. Look how it looked like it was going to take off at that 50%. It pulled back, okay, hit, and most people had their stop losses on it here. It took them out of the market. Now it took is into the pip. Look how if we just put, if I just put this, my stop loss 30 pips below, okay, just below that, I'm taking a very small risk, and I get in here. Just when it gets to the pivot point, I'm already profitable. Look at the top end on the left side. I'm already profitable 122 pips. While most people are just getting in at this bullish engulfing, I'm already up 122 pips on that trade by knowing how to effectively use pivot points. In addition, look, you want to always keep on your mind the previous day's pivot point, because look how it was also converging. That's also a strong support level. It was converging with today's support 1 with a Fibonacci number and the monster 0. I mean, you had a lot of factors telling you that this market wanted this to take off north. And as we can see this, the market did take off. And look how it was converging with a 618 and a resistance level. So again, that would have been our limit. And we had 2 profitable trades in 2 days just using pivot points. I mean, if we got in right at the 00 and got out just using that resistance point here, we made in 1 day, that was a 432 pip profit. And I took this trade, this was just yesterday and the day before, and that's $4,000 in your pocket in 1 day by knowing this strategy. And then look at again, you just waited for another bounce at the 00 again. You took that trade, it rode it up all the way to that 618 again. Extension, if you got in right at the pivot, okay, that was another 400 pips. That's $8,000, almost $9,000 in profit just using pivot points, Fibonacci tools. So you're going to see how valuable this information. Very few traders know how to use these pivot points, and now you're going to have this tool in your toolbox. In addition to that 00, okay, and look how neither of these 2 trades, okay, did we go 1 pip negative in our favor. And that's pretty amazing that right when you got into the trade, it went your way from the beginning. So you didn't have to suffer and do all that pullback. I mean, you hit, got you in, started going your way. So it was profitable from the first hour that you were in that trading. And that's the difference between knowing pivots and not knowing pivots, that you're going to be profitable right from the first second. Okay, now applying it to now, look how we've broken this pivot. Okay, and now we formed really a big A with a big B. Okay, and I'm looking at an entry point. And if I want to look at a convergence, okay, and I pull the A to the B, okay, I got the previous day's pivot, and I got today right here, so, and a 618, and I got the monster 0. So this market, we might want to be buying when it gets into 48.00, and then it's going to ride up. But now we have a nice opportunity to take it short, this market, and take it all the way down here. Look how we're going to profit from this going short. 222 pips, okay, and we could put our stop loss just right above that. So we're thinking about 80 pips of risk for another 200 pips down, and then we'll take it back up. So pivot points are going to make us take profit if the market's going up, down. It doesn't matter. We'll take it short and then we'll take it long. And if this will become profitable. Okay, so my name is Vincent Luce with Forex Trading Institute. I recommend you go over this lesson several times. You're going to see how valuable these pivot points are going to be into your trading portfolio.